This is the last entry from a trading journal. Day 2555. 7 years of binary options trading on pocket option. Total deposited, $230,000. Total withdrawn, $11,000. Net loss, $219,000. The journal ends there. No explanation, just the numbers. But this story is not about the numbers. It is about the one day that made all of this inevitable. And it happened in year 2, before the real damage was done. To understand it, you have to go back to day 1. Day 1 started with a pocket option ad on YouTube. It showed a man making $200 in 10 minutes. Binary options. He was 26, working a desk job he hated, making $30,000 a year. He deposited $200. It felt like buying a lottery ticket. First trade, $5 on Eurodollar. Up, 60-second expiry. It won, $3.90 profit in 60 seconds. He placed another. Won. Another. Won. 7 trades that evening, 5 wins. Net profit that night, $19. His hands were shaking. He wrote in his journal, "This is real. This is actually real." Here's the stat nobody shows you in pocket option ads. 90% of binary options traders lose money. Average account gone within 3 months. He did not know that yet. Week 1 ended up $60. He told nobody. Week 2, down 40. He kept that quiet too, but he kept a detailed journal. Every trade, every result, every feeling. Month 3, he discovered TradingView. Support and resistance, candlestick patterns. He had a notebook. 240 pages of hand-drawn chart analysis. He was treating binary options trading like a university degree. End of year 1, 12,000 deposited, 9,000 withdrawn. Net loss, 3,000. He wrote, "3,000 for an education, fair price. I am improving." Year 2, he discovered a new binary options trading strategy. RSI divergence combined with support breaks on the 5-minute pocket option chart. He backtested it on TradingView. 73% historical win rate. 3 consecutive winning weeks live. He started trading bigger positions. Then came a Tuesday in March. The Eurodollar was moving hard. A major economic announcement. The market trending with force and volume. He spotted a perfect binary option setup. Clean resistance break on the 5-minute chart. He placed a $10,000 trade on pocket option. Up, 5-minute expiry. Pattern interrupt. The average binary options trader risks $50 to $200 per trade. He was risking $10,000. 4 months of salary on a single trade. The candle closed green. $8,000 profit. 5 minutes. He reloaded immediately. Another $10,000. Down. The market continued. By 3 p.m. that Tuesday, he'd made $18,000. $18,000 in one trading day on pocket option. He sat at his desk and stared at the screen for 40 minutes, not moving. Then called his best friend at midnight. Woke him up. He printed his pocket option account statement and kept it on his desk. He wrote 3 pages in his journal that night, all capital letters. The last sentence, "Now I know it is possible. I can do this every week." He could not. Not once in the next 5 years. But his brain had been permanently changed by that one Tuesday. The Tuesday was March 14th. He remembers the exact date. 2 years later, he still does. The Wednesday after, he could not sleep. He stayed up replaying every detail of the Tuesday trades. He wrote 14 pages in his journal that night, analyzing what he did, exactly how he did it. He believed he had cracked the code, found the combination that unlocked the binary options market. The following Monday, he was back at pocket option, waiting for the same Eurodollar conditions. They did not come. He traded anyway, down $1,200 in 4 hours. Tuesday came. He waited for the exact same momentum setup. The market did nothing. Wednesday. He forced a trade on a setup that looked almost right. Lost $800. By Friday of that week, he had lost $3,200. He wrote in his journal, "Wrong week. The conditions were not right. Wait for the real setup." The month after the Tuesday, net loss $11,000. The month was not the problem. In his mind, It was still the wrong entry on that Wednesday. He kept the Tuesday pocket option screenshot as his phone wallpaper for 4 months. The screenshot was his evidence, his proof that he belonged in binary options trading. His anchor. Every trade he placed for the next 5 years was in some way a search for that Tuesday again. Here's what happens inside the brain after you make 18,000 in one day. Dopamine fires, identical to winning a jackpot on a slot machine. The brain does not process, that was a unique market event and a lot of luck. It processes one thought only. I did it once, I can do it again. This is intermittent reinforcement. The same psychology behind gambling addiction. Slot machines pay out randomly. Not every pull, not on a schedule. Randomly. That unpredictability is exactly what makes them irresistible. Random reward is the most addictive pattern in psychology. Binary options trading is the slot machine with extra steps. He had just hit the jackpot. The week after the Tuesday, he tried to replicate it. 17 trades placed, 13 losses. Net result? Minus $4,800. He wrote in his journal, I was overtrading. I did not wait for the right setup. Notice what he did not write. Maybe that day was a one-time coincidence. His brain had already decided. The Tuesday was proof. The losses were just mistakes. Year 2 ended with a net loss of $8,000. He deposited more the next week. Year 3, new binary options trading strategy. Founded on a trading YouTube channel. Bollinger Bands combined with MACD on the 1-minute pocket option chart. 6 weeks of TradingView backtesting. 68% historical win rate. Went live. 3 weeks in, down $11,000. Pattern interrupt. The average losing binary options trader tries 8 different strategies in their career. Each new strategy resets the loss clock in their mind. This one will be the one. He wrote after week 3. The strategy is valid. I just need more discipline. Year 3 deposits, $31,000. Withdrawals, $6,000. His girlfriend asked why he was at his laptop every single evening. He said, I am learning a new skill. It takes time. I am nearly there. End of year 3, total lifetime deposits, $56,000. Here's the comparison that nobody in his trading community ever mentioned. $56,000 put into a plain S&P 500 index fund from year 1. By end of year 3, that would have grown to roughly $72,000. No excitement, no $18,000 days, but growing, safe, real. Nobody in the pocket option community ever talked about index funds. Let me show you the complete real cost of 3 years of binary options trading. Obvious cost, $56,000 deposited into pocket option, $9,000 withdrawn. Net loss, $47,000. Hidden cost 1, courses, books, and coaching fees, approximately $5,000. Hidden cost 2, the time. 3 years of evenings and weekends, approximately 4,000 hours. If he had spent those 4,000 hours on a marketable skill, programming, accounting, or sales, those skills would have added $20,000 to $40,000 in annual income within those 3 years. Hidden cost 3, the opportunity cost of the lost principal itself. $56,000 in the S&P 500 over 3 years would have become $72,000. That is $15,000 additional dollars he did not make because the money was on pocket option. Total 3-year cost, including all hidden costs, $107,000. For context, $107,000 is the median American household income for 3.5 years. He never saw this calculation in years 1 through 3. He only ever saw the weekly P&L. This is by design. Pocket option shows you the week, not the cumulative lifetime cost. Pattern interrupt. The most effective way to keep players in a losing game is to show only short performance windows. Casinos do not show you your lifetime loss. They show you last night. Binary options platforms do exactly the same. He was making decisions based on last week, while the lifetime picture was catastrophic. This is the information gap that keeps losing binary options traders in the game. If every pocket option login screen showed your lifetime P&L centered on the page, most traders would stop. It does not. It shows your current balance and your recent trades. He never calculated his lifetime P&L himself. Not until year 7. Not until day 2,555, year 4. He discovered trading psychology books, Trading in the Zone, The Disciplined Trader, He read both of them twice. He understood everything now. Analysis paralysis, overtrading, revenge trading, pattern interrupt. Understanding a cognitive bias does not protect you from it. You can name every logical fallacy and still fall into all of them. Knowledge is not enough. He paid for a binary options trading course, $2,400. The course taught exactly what he already knew: support resistance, RSI, trading view setups. If you are watching this and recognizing your own story, follow me on Telegram at Easy Austin. Real binary options analysis every week. No courses, no signals, just honesty. Back to year 4. He paid for a one-on-one trading coach next, $300 per hour. He booked 8 sessions. The coach told him, detach emotionally from each individual trade. He traded with the coach live on a call. 2 consecutive wins. It felt like a breakthrough. The week after coaching ended, down $6,000. He stopped the sessions. Year 4, total deposited $83,000 across 3 separate pocket option accounts. His girlfriend left. She said, "You are not present. You are always somewhere else." He wrote in his journal that night, "I just need one more good month to prove this was worth it." That sentence is the sunk cost fallacy written in plain language. The more you lose, the harder it becomes to stop. Because stopping means the pain was pointless. Continuing to lose feels more rational than admitting it is over. The math does not matter anymore. Year 5. He quit his desk job to trade full-time on pocket option. He told everyone, "I am a professional binary options trader." He had not made a profit in 12 consecutive months. Year 5 had ended with lifetime deposits at $112,000. Year 6. He found a binary options trading bot. Automated, algorithmic. The bot had a documented win rate of 62%. He paid $800 for it. He ran it live for 3 months. The bot lost more consistently than he had manually. He shut it down, filed it under mistakes, then deposited more. Year 6 deposits, $41,000. Running lifetime total, $153,000. He stopped keeping detailed notes in the trading journal at this point. The entries got shorter, from 3 pages a night down to 3 lines. Year 6, final entry. Tried new binary options trading strategy. Another loss. Moving on. Year 7. He was 33 years old. He had been trading since he was 26. Year 7, he deposited $77,000 across 4 separate pocket option accounts. That brought his lifetime total to $230,000 deposited. Then he opened the journal one last time. Day 2555. The entry was short, 4 sentences. Here's what it said. Sentence 1. Today I accepted that the $18,000 day is never coming back. Sentence 2. It was never a proof of skill. It was the luckiest trade I ever placed. Sentence 3. I've spent 7 years chasing one lucky day. Sentence 4. The journal ends here. He closed the notebook, set the pen down, did not place another trade that day. He has not placed a trade since. Let me tell you the 3 specific things that kept him inside this for 7 years. Number 1, the $18,000 day. One win that rewired his brain for years. This is why the first big win in binary options is the most dangerous thing that can happen to you. Not the first big loss, the first big win. The loss teaches. The win traps. Number 2, the sunk cost fallacy. $230,000 makes quitting feel impossible. The money already lost feels like it is still somewhere in the future waiting to be recovered. It is not. Sunk money is gone. The only question is whether you lose more. Number 3, identity. He called himself a trader. He introduced himself as a trader. Stopping trading would mean admitting that his identity for 7 years was built on a losing proposition. The ego protects the story, even when the story is destroying you. Which of the 3 is hardest to escape? The identity, because you cannot admit what it costs you. Let me tell you something specific about how identity makes the trap unbreakable. At year 1, he would have said, I am a guy who trades binary options on the side. At year 3, I'm working on a trading strategy, almost profitable. At year 5, he introduced himself as a full-time binary options trader. Notice how the identity got stronger every year, while the trading results got worse. This is identity foreclosure. You become the thing you do, not the person who chose to do it. When someone questions if binary options is profitable, they are not questioning your strategy. They are questioning who you are. The brain defends identity more fiercely than it defends logic. His girlfriend did not leave because he lost money. He had lost money every single year. She left when she could not find Austin anymore behind the trader. There was nothing else left. He ate trading. He dreamed trading. He read trading. He breathed binary option strategy. Sunday morning ritual. Pocket option, trading view, journal. Before coffee, before conversation. This level of identity fusion is what makes the exit psychologically violent. Stopping binary options did not feel like ending a hobby. It felt like ending himself. The most important step was not finding a better strategy. It was separating the activity from the identity. He needed to say, I am not a trader. I was a person who traded binary options. Past tense. Activity, not identity. This is the shift the journal entry created. Not the losing, not the math, the identity shift. The sentence in his journal: I have spent 7 years chasing one lucky day. That sentence requires looking at yourself as an outside observer, as a data point, not a person. That is the moment identity and activity finally separated, and the journal could close. Now let me show you 5 signs you might be in the same trap right now. Sign 1. You have tried more than 3 different trading strategies on pocket option. Sign 2. Your pocket option deposit history shows more going in than coming out every month. Sign 3. You think about your trading account when you are not trading. Sign 4. You have told someone you are improving even while your balance is declining. Sign 5. There is one specific big win you reference when someone asks why you still trade. If 3 or more of those describe you right now, you are in the intermittent reinforcement trap. Here's something nobody tells you about the pocket option binary options payout structure. A typical binary options trade pays 80% on a win. You lose 100% on a loss. That math means you need to win more than 56% of your trades just to break even. Professional full-time traders average 55% win rates on their best years. The payout structure of binary options makes long-term profitability nearly impossible for retail traders. This is not a trading skill problem. It is a math problem. He was not a bad trader. He was an intelligent, disciplined person using the wrong product. The same discipline applied to index investing would have made him wealthy over those 7 years. He is 33 years old. He still has time. That is the only good news in this story. If you are watching this at 26 or 30 or even 35, you have time to change direction, but only if you stop today. Not after one more binary option strategy, not after one more deposit. Today. I share real market analysis every week on Telegram at Easy Austin. No courses, no signals, just honest truth. The trader closed his journal on day 2555. What day will yours be? I want to tell you what month 1 after stopping looks like, because nobody ever talks about this part. Week 1. The first morning, he did not open pocket option. He sat with his coffee for 40 minutes. His hands moved toward his phone out of muscle memory, then stopped. The silence felt wrong. Trading had filled every silence for 7 years. Week 2. He felt cognitive withdrawal. His brain was searching for the stimulation it had been trained to expect. The charts, the next potential setup, the chance of another Tuesday. The brain kept looking for the slot machine. Week 3. He started going to bed before midnight for the first time in 5 years. He had not realized how much sleep he had been losing to late-night TradingView sessions. Week 4. He calculated what he would have deposited that month. $4,000. He did not deposit it. He put the $4,000 into a plain S&P 500 index fund for the first time in his life. It felt boring. It felt small. Compared to the Tuesday, it felt like nothing. But it was the first money he had ever moved that did not have a 44% chance of total loss. Month 2. He got a new job. More interesting than the old desk job. He could focus in the interview. He had tried to get better jobs 3 times during the trading years and could not concentrate in any interview. Part of his brain was always at pocket option, even when he was not physically there. Month 3. Someone at work asked what he had done before this job. He paused, then said, I tried day trading for a while. It did not work out. Not, I am a trader. Not, I was a professional binary options trader. Just, I tried it. Past tense. That was the identity shift. 7 words. 3 months after day 2,555. Month 6. The index fund had grown by 4%, about $240. $240 in 6 months. On pocket option, he would have called that embarrassing. Now he looked at it and saw $240 he did not lose. The math of recovery is not exciting. It is just different from the math of loss. Here is the final calculation for this story. $230,000 in the S&P 500 from year 1 of his trading career. 7 years later, approximately $444,000 at standard historical returns. $444,000. Instead of $11,000 withdrawn from pocket option, that is the real cost of the intermittent reinforcement trap. Not what was lost. What was never built. He is 33. He will be fine. He has time. But he cannot get those 7 years back. The money he will build from here does not include the compound interest of years 26 through 33. That is the true price of the Tuesday. Not $18,000 gained. $400,000 never accumulated. If you are in the trap right now, the exit does not require a different binary option strategy. It requires accepting that the product itself is not designed for retail traders to win. The math will not allow it. Follow me on Telegram at Easy Austin. Real market analysis every week. No courses, no signals, just the honest truth. The trader closed his journal on day 2,555. He opened an index fund on day 2,556. What day will yours be?